Retail investors are completely ignoring Chainlink right now because the price is stuck between $8 and $9. They look at the weekly chart, see a boring sideways crawl, and move on. But while public sentiment is completely asleep, the hard data tells a different story. Right now, Chainlink holds a 64% market share in the Oracle sector, securing over $39 billion in value secured. The nearest competitor is Chronicle at 11%. We are watching a universal translator between blockchains and traditional infrastructure establish a literal monopoly. Today, I'm going to show you exactly why this specific $8 level matters. We'll look at the exact on-chain revenue Chainlink generated in January and February of 2026 and apply that fundamental reality to a weekly technical setup that has only triggered a few times in history. Let us begin. Chainlink is currently testing the patience of anyone who held through the volatility of 2025. The market sentiment snapshot right now is pure apathy. Very few people are talking about Oracle infrastructure or cross-chain interoperability protocols. They want fast returns. But as a data-driven investor who has been position trading these markets since 2020, apathy is exactly what I look for. I want to build positions on high timeframes when the asset is out of favor, but the underlying business is growing aggressively. This video matters right now because we are sitting on a massive historical support level. The current price action is hovering directly over the accumulation zones from the 2022 and 2023 lows. Those multi-year lows were heavy resistance, but they have now flipped into support. When you see a structural flip like that on a macro time frame, you have to pay attention. We are not guessing, we are looking at market structure. But there is something in the technicals that changes this picture entirely when you align it with what is actually happening off the chart. The fundamentals validate this support. Chainlink is no longer just a decentralized finance tool. It is the base layer connecting the $80+ trillion United States stock market to the blockchain. We are seeing real-world equity markets entering the decentralized space right now. Recently, Ondo Finance adopted Chainlink as its official data oracle to accelerate the adoption of tokenized stocks and exchange-traded funds. They are bringing assets like the QQQ index and Tesla directly into Ethereum decentralized finance environments. To do that safely, you need institutional-grade data. That is exactly where Chainlink steps in. Then you have the Canton Network, which just adopted Chainlink data and interoperability standards to unlock institutional tokenization. They are targeting that $80 trillion market by using the Cross-Chain Interoperability Protocol, Proof of Reserve, and 24/5 equity data streams. By providing continuous market data that covers pre-market and overnight sessions, Chainlink solves the core data friction that prevents traditional finance mechanics from working on-chain. It's not just slow-moving legacy markets. Polymarket just launched new 5-minute crypto markets powered by Chainlink. This proves their technical capacity to support ultra-low latency, high-frequency activities. Furthermore, Coinbase selected the Cross-Chain Interoperability Protocol as the exclusive bridge infrastructure for its multi-billion-dollar wrapped asset suite. Securing exclusivity with Coinbase is a massive moat. Most importantly, this adoption translates directly into actual revenue. If we look at the top real-world asset coins by actual revenue generated in January and February of 2026, Chainlink ranks second with $12.8 million. This separates the token from purely speculative assets. It's a fundamentally profitable on-chain business. Recently, the Chainlink reserve accumulated over 129,000 tokens, valued at $1.1 million. The reserve now holds over 2,300,000 tokens. They generate real yield from enterprise contracts and convert that revenue into protocol reserves. Add in a GitHub development activity score of 268 over the past 30 days, and you have a network that is heavily active. We have a clear divergence between business growth and price.
On the weekly chart, I start macro because this time frame filters out daily noise to reveal true market structure.
Right now, Chainlink is below the 21 exponential moving average, which is the red line on my chart. And it's also sitting below the 200 simple moving average, the green line. When you are below these key moving averages on a weekly time frame, the trend is officially defensive. You are swimming against the current. However, context is everything. If we anchor our Fibonacci retracement from the local top of $31 back in December 2024 down to the major flushout at $8 in October 2025, we get a very clear roadmap. That October 10th wick down to $8 was a massive liquidation event. It cleared out the late longs and perfectly tested the exact resistance levels from 2022 and 2023. That old resistance has explicitly turned into our current foundational support. That's why my primary load zone, the green box on my chart, sits firmly between $7 and $10. I'm slowly accumulating my position here for the long term. For long-term holds, I secure my tokens in a hardware wallet for safety. You never leave your foundational bags on a centralized exchange. Chainlink currently represents 3% of my total portfolio. My main weight remains in Bitcoin and Ethereum at 65%. I size it this way because I want exposure to the premier infrastructure play without taking on the risk of an unproven microcap. Now look at the indicator below the price action. The Heikin-Ashi Relative Strength Index is printing the most oversold readings in its history, pointing downward. I added white circles on the indicator and matching circles on the price action to highlight a historical pattern. Every single time we have seen this specific oversold condition in the past, it marked a premier accumulation zone that preceded massive structural appreciations in price. But we have to manage our risk against the upside resistance. Notice the descending trend line, the orange dotted line, coming down from the August 2025 local top at $26. That trend line will act as heavy dynamic resistance. My take-profit strategy is highly systematic. If we reverse, the closest resistance is $10. If we clear 10, the next major hurdle is $13, which aligns perfectly with our 236 Fibonacci retracement level at $13.40. I have specific targets marked by the green circles on my chart. I'll take profits at 13, 16, 19, 22, 26, and finally at $45. When you synthesize the fundamental monopoly Chainlink has built with this exact weekly technical setup, the risk-adjusted returns look incredibly compelling. The worst-case scenario is a breakdown below that $7 macro support. That would invalidate my current thesis and likely mean the broader crypto market has entered a severe macro contraction. If that happens, my portfolio sizing protects my capital. But the upside scenario is backed by actual data. And while we wait for that upside, deep liquidity ensures that the token remains heavily utilized in decentralized finance. On Uniswap v3, the BNB to Link pool is showing an annual percentage yield of 55%, and the massive Link to Ethereum pool, holding $23 million in total value locked, is paying out 25%. By utilizing these pools, you can compound your bags while waiting for the technical breakout. My core thesis is that Chainlink is transitioning from a speculative utility token into an irreplaceable, yield-generating base layer for global finance, and the weekly chart is offering a rare historical entry point based on macro support. We have real revenue, massive integrations, and a deeply oversold chart. To survive in this market, you have to stop chasing green candles and start positioning yourself where the data points before the crowd arrives. If you found value in this data-driven approach, please like and subscribe. It tells the algorithm that you want real analysis. Also, join my free Telegram group for faster daily updates. The link is in the pinned comment. Finally, I highly recommend you watch my last two videos about Chainlink. I tend to cover everything that has happened since the last update, so you must watch them for the full story and position development. As always, this is not financial advice. I'm just showing how I'm managing my own Link position and portfolio. Manage your own risk too, protect your capital, and I'll see you in the next one.